All right, guys. Welcome. Let me make sure I'm sharing my screen. This is today's mid. Today is September 24th, 2025, and it's the midweek review. We just got some sauce from Jim Rohn. I don't want to share that because I don't want to get the content blocked, so I won't do so. If we look back in this week, I haven't taken a trade at all. I haven't even looked at the chart since the contract changeover. So I have to be honest. I don't know what's going on this week. I've been out of it, man. I've been really busy with work. I'm coming up to the go live date on this project I've been working on, and had to do some traveling this weekend to go see little sister Kim go get married. So that was that. And just trying to finish off this last little bit. So looking at the previous days of the Monday, Tuesday, and today, we had no news on Monday, but we had kind of a run up on Monday, even though we didn't have any news. We just had one FOMC member. Then Tuesday, we had a lot going on Tuesday. We had Powell speaking, we had Trump speaking, and on Tuesday, I don't think they liked what either of them said. Um, we had Flash PMI, which came in lower on both sides. The we also had, like I said, we had Powell, and that kind of confused the market a bit. And basically, what he's implied is that we have slowing economy. And I think I even posted an Instagram post about what he was saying, and essentially that, we're starting to see increase in the number of people that are looking for jobs, but and we have an increase in the unemployment rate in minorities and younger younger adults, and that's taking its toll on the current economy state of the economy. So and you know he also mentioned that the idea that a lot of it is due to AI isn't the data isn't backing that up, and we're seeing like a lot of companies that have chosen not to lay off people, but we are seeing a lot of companies decide not to hire anybody either. And the term that they're using in corporate world is they're trying to stay lean. And what that means is, at least in my IT environment, and I'm pretty sure it's, happening in other industries as well, but what you're starting to see is companies are you guys can see my screen?
Yes.
Okay. What you're starting to see is a lot of companies are choosing to lower their full-time employee and starting to bring in contractors to backfill that work. And for the company, it gives them the opportunity to, once things change or if they get into more financial constraints, they can just get rid of those contracting companies and they don't have to pay as much for a contractor. But for the employee, it's probably putting them in a situation where they're overworked and underpaid, because that's where the brunt of that is going to fall back on when it comes to situations like this. So, it's a lot more that can be said about it, but I think that was some of the gist of, what was being said. And I think he did kind of tip the hat that we will get another cut on the interest rate, probably another point 0.5 within the next, the next within this quarter, Q4. Not necessarily thinking that he may cut on the next interest rate. Maybe, I don't know. If we go to let's go to the CME watch tool real quick. CME Fed watch tool. They are projecting, and that the next rate cut is in 34 days. They are actually projecting another 0.25 basis, 25 basis point cut. So right now we're at 4.25 on the interest rate, or 450 on the interest rate, however you want to look at that number. So we're sitting right here. They're saying it's 8% chance that we stay at this rate. They're projecting that he goes to another quarter point to put us at 400 or 4.0 on the interest rate. I don't know. I think that, we need to actually, if it was me, if it was me, I'd wait and see how the point 0.5 interest rate cut that I just did affects the market, because now we're actually about to go into Q4, and we should see some additional spending as we go into holiday. But we'll have to kind of keep an eye on it, Uh, we have our heat map. This is the heat map for the week. We kind of got a mixed bag. The tech is still up for the most part. And we kind of have like a mixed fruit, and that kind of mixed bag of fruits, and that's kind of pretty much aligning with the price action for this week. Since we don't have a lot of news, we got to look at what's going on in the market, and you can see technology has pretty much been the thing that's leading us with our big two. With our big companies, Nvidia kind of pretty much leading the way, Nvidia and Apple. Um, Google coming in down 1% this week so far. You got your Tesla at 6.5%. And then, you kind of got like your finances are all up for the most part. You have your producer manufacturing kind of down. Utilities pretty much for the most part up. So you can see what's weighing is down. Retail is down right now. For over the course of the week. Consumer services seem to be down, and we kind of got just like a mix overall. But we probably are. We're still weighted heavily on the tech side that's keeping us afloat. So you just got to kind of look at it with a grain of salt. We can look at the tech at Nasdaq. Okay, Nasdaq. You see Nasdaq looking similar to ES, where we pretty much have you know, we pretty much have, you know, mixed bag across all of the sectors. So that's kind of where we are standing with this right now. Let's check Dow
Hey,
Jones.
hey, Corey, real quick, how do you get there? I've never seen it this way.
I'll send you the link.
Okay,
I'll,
great.
I'll send you the link. Um, here's well, let's look at Dow. Mm, 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 mm. Similar, just less companies. This whole technology sector seems like it's holding up the whole Dow. So, this is just what it is right now. Dow is just kind of being held up by our tech stocks, and this is what we're looking at. This is what we got to deal with right now, and that's understandable. Right now, tech companies have the most money to spend. They got the most capital right now to be able to introduce anything new into the market. So, that's just got to be what it is right now. Hang on one second. I'm trying to check I'm going to check out what's going on in the earnings, if we got any earnings. I don't think we got a lot of earnings, but give me a second. I'm trying to log into the account. And it is somehow logged me out. I hate when that happens because now you got to go through all the craziness to get back in. But I got it. I think. Okay, here we go. All right, I'm gonna pull it on the screen. Um, so we got not much. Again, not much in the earnings space. Accenture, CarMax, probably the most familiar companies. Nothing overall in the sector. I guess we got our consumer discretionary, consumer consumer discretionary with our Costco. They're retail, but you can kind of consider them discretionary. We had AutoZone. Nothing too big. No option plays of late. Let's go ahead. Let's start with our option plays. I haven't looked at it in a couple.
Mara did really good.
Let's see. Um, I don't want to open it this way. Hang on. Let's see.
Mara hit all targets.
Let's open up a new window. All right. And we had Lulu. Lulu is doing good. I don't think I had that one really marked up. I didn't really like that one, but our clean spark. Let me see what this one doing. Clean spark at 888. This, oh man, when did I put this in? September 7th. See, this is what I'm talking about. See, I missed this and I should have just bought it when I caught it. So we had, dang it, we had our alert on Clean Spark at 9:42, which was above this high, and 888. You see where we are right now?
Yeah.
14. From where we saw it, we could have got in on this candle right here. We would have saw a 300, 500% gain. Dang it, I should have got that. So I've been too busy. I haven't even paid attention. So let's check out SMCI. We had our alert at 39.10 here. And what was the alert from above? I think we had it above one of these candle highs. I don't remember, but we already up. We would have already been up on this. So I hate to even look at it, but it's all good. This would have been up 177% right now at the max. And we're looking at this would already you would already make a 100% gain on this at least. So this is I'm just showing this at this point just to say that hey man, we need to start taking these trades more because these give you time. So this is a reminder to myself as well because there's no way we should be missing out on this because we had days to plan for this. And even if we didn't get in on the initial entry, we could have got in on this candle, this candle, this candle. This even came into the gap right here. And we could have bought it at any point on any one of these candles or this candle. So I'm gonna have to find the next setup and I'm just gonna buy it as soon as I see it. I'm gonna set pending orders on it. So kicking myself right now.
Mm.
Did you get in anything, Anna?
No, not I started to look at on Tuesday, last Tuesday. Then I saw that Mara was also up. Then
My
I thought,
girl,
yeah,
see?
that is not going to come back again.
Mm,
So I
mm.
thought it's better to leave it.
Let me look at my, yep, it's up.
Mm.
Same situation.
And,
We projected it to push up. We traded all into this, just like I thought we would.
mhm.
Irene, I don't think I looked at Irene on that. Let me see what sound doing. SoFi. SoFi from the time we did this same situation, we already up. Uh-huh.
I wanted to buy, but I thought you said we should wait, it will come down.
No, 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 no. This would should have been a buy.
So I thought I don't want to make a mistake.
We had what else was the other one? Chew, Chewy.
Mhm. Yeah.
Um, Chewy. I don't know why I don't have the markup on this one, but I remember I didn't like it actually, but it still bounced though. And I knew we would at least come into this gap, and we pretty much did. So, um,
So far.
SoFi. Yeah, I think I just looked at that one. SoFi already did what it was.
Yeah.
SoFi up from here. Yep, yep. So, um, there was one more.
That Jamia.
Which one?
Jamia.
Jamie. Yeah, Jamia.
Jamia.
Yeah, Junior. Yep. Oops. Yep. It's already did what I thought. Held in this price gap. They used the price gap as support, and we pretty much hit this target in this inverted fair value gap. See this, and this thing did exactly what I thought it was gonna do, you know.
Yeah.
Um, this price gap, and the reason why I was looking at it to do this is because on the weekly, on the monthly, I'm sorry. The reason why I figured it would do this is because if you look at it, and I guess this wasn't a monthly price gap. I think this might have been a weekly. Yep, weekly.
Yeah.
So the reason why I figured it was going to do this is because we had already closed inside of this gap on this candle when I got the markup.
Mhm.
And because we closed inside of this gap, it was it would be a hard sell to say that we would close below this without trying to touch the top, or at
Yeah.
least trying to trade through it at least once. Knowing that we had this inverted fair value gap on the must have been on the daily. Yep. Had this inverted fair value gap over here that hadn't been touched. So with that being said, that was the catalyst kind of for this to be a potential move to go ahead and bounce into this. So I'm gonna be on the prowl for some more options setups, but until then, I want you to be ready, Anna, and I want you, Treese, to at least put $100 in your Robinhood account so we can get you on this option stuff.
I already did. I don't know what to do. So
All right, all right. I'm gonna tell you what to do. I'm gonna just tell you what to do.
Yeah, I'm
We can
ready
find
also.
we can find some cheap contracts. So all this is what I'll do.
Mhm.
Every Friday, I will not every Friday, but every Sunday when we do our Sunday call, we're gonna do our weekly option buys, right?
Okay.
And we will look for cheap option calls to buy.
Okay.
And those option calls, they're gonna be like 2 or 3 week, a month to 4 month holds. They're not gonna be no get in, get out. Unless you pull the trigger. If you pull the trigger before, we reach our targets, that's on you. That's no problem because hopefully by the time we reach our target, we already up 300 to 400% on it.
Okay.
And since it's gonna be hard with $100, but because you might only be able to get in one or two of those, depending on how much the contract costs. But I'll try to find contracts where you can buy them for like $30, $40.
What is ideal to start with?
Anything like I said, start with what you got. It's just you just may not be able to get into every setup because some of the setups might cost you $100 to get in.
Oh, God.
You just have to pick the ones that don't. So if we again, I like this little option tool. Where is it? Um, where that thing go? Um, Options. Okay. If we looking at Jumia, right? Right now, this is one that usually has some cheap options, I think. Can't remember, but let's look at the chain, right? So if we got contracts for, and I'll just start with the one we on right now. This is the October 24th contract. So this expires on October 24th. Since we buying calls, right? We need to be focused on what the ask is, right? Since we buying, right? And if we are saying like, hey, we think that this can go to this previous month high, right? Which means that we think it could go to 1506, whatever this price is. So I'm a try to buy something that's let me flip this. I'm gonna try to buy something that's already in the money up here. You want to buy stuff that's in the money already. And the way that I look at my strategy with this. So anything that's above the current strike price or current asking price, which is 1148, you see that number right here.
Mhm.
um that's what you want to look for. So I'll say, hey, let me find the cheap calls, right? The cheapest calls that I'm seeing right now is above the asking price of 1148 is um the 55 cent calls, right? For the $14 strike price at 55 cents. So that means that if we wanted this, we would be buying a single contract for um 55 55 cents, but you multiply this by 100, which makes this $55.
Got it. Okay.
So whatever the ask is, you multiply it by 100. So this would be 145. This would be $85. And that's what I mean when I say, hey, you might not be able to get in everyone. Sometimes you'll have to, you know, uh take with what you take something a bit small like a contract like this, right? But that's why I look at the leaps and a lot of times depending on the company, the contract that expires sooner will cost you a little less, but that also gives you less time to be in the trade. So you may want to get a sooner contract, but that if it doesn't go in your favor by the time it expires, that means that you might have to close it a little earlier. But you will be able to get it a little cheaper, but it just may not be what you want to as far as the price goes, you know.
Okay.
And and also, let me look at that same contract on my phone. That same contract, the $14.55 contract, um, $14
On Robinhood?
on Robinhood is actually cheaper.
Okay.
On Robinhood, that same call is 50 cents. So if we were to buy that, it'd actually be $50. And if I tried to buy it, you can look at the spread, right? That's the cost between the ask and the bid. So it's pretty much a 25-cent spread. You can actually use a pending order and put the pending order in between the spread. So it might say that it's 55 cents, right? But if you put a pending order in for like 40 cents, you can get that same contract for 40 cents or $40 instead of $55.
Can you come over again? Means you did minus from ask minus bid, right?
Yep. The
Oh.
difference between the bid and the ask.
Mhm.
So it's 25-cent spread. So anywhere in between the spread, you can put a pending order in between. And some in most cases you have to do like 5-cent increments. So you wouldn't be able to say like I'm gonna put it at 32 cents, and try to get it for $32. You would have to say, hey, I'm gonna put it at 35 cents and try to get it for $35. But that means you may or may not get filled, so you have to consider that too.
Mhm.
So you might go in and you might see that the asking price is 55 cents, but you still think that it got some room to drop. So you don't want to buy it immediately in some
Yes.
cases, right? So I'm gonna put
Right.
a pending order in because I think that this contract could go down to 40 cents before it move up. So I'm gonna put the pending order at 40 cents, which is pretty much the halfway mark of the between the bid and the ask, and then I'm gonna try to get this $14 contract um for the for that strike price. If we look at the longest dates that they got the January 28th contract out, and you can see the same contract. We don't have the $14 strike price, but we got a 12. To get this is $530, right?
Yeah.
But getting this, you pay more, but you got a longer time to sit in it, right? So if I'm looking at this chart, do I think it's going to get to $12? It looks, it's $12 pretty much already been tapped, right?
Yeah.
Do I think it's going to get to $15, right? We already said that we think it's going to get to $15.
Mhm.
Do I think it's going to hit the $15 mark before January 28th? January 21st of 2028. I absolutely do, right? If I'm looking
Mhm.
at this chart and we're already at 11:48 and we've touched $12.38 between now and January 21st, 2028, do I think that this is going to hit $15? I would assume so, even if we don't do nothing but tap it and then close out. Then, if I felt that confident, I would spend the 530 on this, or anywhere between 530 to $450 for this $12 contract or the $15 contract. Then, if we look at the last contract, we got you can see that we have the September 26th contract, which is Friday. This expires on Friday. And now you can see, like, okay, cool. Since you only got $100 in your account, Trees, You can buy the $12 contract and you can go $12 on the contract and you can buy your contracts anywhere between 25 cents and 5 cents. So you looking at $5 to $25 contracts right here. So if you were to get a $5 contract, you get the $5 contract for the $5 $12 strike price. You spend $5, and if we start moving in your favor, maybe you can buy 20 of those, you know what I mean? Or maybe you
Yeah.
buy 10 of those, and you double that if we can get to that $12 strike price. You,
So can I ask a silly question? Is that the same as buying and selling your spread?
no,
Okay. All right.
I, I don't I don't know what that term is referring to in this particular case, but
What that is spread.
I mean the spread is just the cost between the ask and the bid price.
Yeah, that is a difference.
Yeah, yeah. So you can buy anywhere in between the bid in you can buy anywhere within the spread. So the spread is a 20 cents, right? So I
Mm-hmm.
can I can place my order within that 20 cent range in 5 cent increments. So I can buy at 10 cent, 15 cent, or 20 cent. And depending on how much more this might get, I can buy it at the ask at 25 cents and just pay $25 for it, which is no problem if I was, cool with this. But, that puts you at a quarter of $100 already. So
Oh, yeah.
you'd be risking essentially 25% of your account.
Yeah.
So if you lost that, you lose $25. Now you only got $75 to play with.
So I'm like, do I need to move this up?
Yeah. What is this? This the October 3rd contract. See these. Look, they got $13 strike price. This one has you can get the $13, that's you can get that for 20 bucks. So for you, maybe you don't want to buy the September 26th contract. You buy the October 3rd, or because you can still get these for cheap. Here go to October 10th. So this is like the process that this is essentially the process that we would be taking to find good option plays, right? First, of course, we mark up our charts. Where do we think it's going to go? Well, I take that back. First, we find some companies at good price levels, right? We find the companies that are at good price level. Got a huge list of ones that I already look at, and then you never know. My buddy might drop me a line on one that he been looking at. Then I'll mark it up, right? I'll get my direction, right? I'm only buying calls right now, so I don't look at the put side yet. Um, but if I see where I can buy, I'm gonna go ahead and mark up my charts, look for my areas of interest, and I'm putting my alert in, right? Then the next step is find the contract that you want to purchase. Find the expiration that you want to purchase. Using this tool, which I'm really liking, enter in the company you want, and then you move to the chain section. The chain will show you all the expirations that they have available. And then you want to find what strike price you want. If I'm looking at this company, my overall target is that it could go to $12. And at the time, that means that the strike price was likely $9 or so. So this black line would have been around here because $9, $10, you already in the money, right? You below the money here. So the strike price of 1148 would have been down here at 972. So that this number would have been 972 right here. And then we would have been looking at our contract, our strike prices to see where we want to buy. And in this case, we probably would have been buying the $12, or the 14 or whatever the case is, whichever one gave us the best price to get in, the cheapest we can get in. And then we would have just been waiting for it to move up. And once it moved up, I like to scale out because I'm gonna try to buy multiple contracts. So I might take off half, you know, but by the time we would have saw us get near this area from where we had our buy set up, we would have been up at the most 27.25%. Multiply this by 100, that means we would have been up 272%, 272.5%. So that means that if we had a risk $100, we would have been up $272 at the height. So we would have been able to, if we closed that, we would have been able to get our $100 back plus $272 to close that whole trade out with $372 on this trade. Make sense?
Yeah.
Cool, cool, cool. So minus the fees. So give you probably like 200 and $270 because I think it's like it's pretty cheap, So that is by the time we go into Sunday, I should have something for us on the option side. But let's go over to dollar first. I haven't marked up the new contract yet, but we took out this low last week. We took out the yearly low, which was here, and we set the new yearly low, right? We still are inside of this weekly fair value gap. I mean, weekly order block right here. If we look over here on the weekly, the order block is right here. The lows that we just made are pretty much around 50% of that order block, which is here. If we draw this out, from week to week, you can see that the low on that we just made is pretty much spot on with the middle of this order block. If we go body to body instead of week to week, which puts that right around here, you can see that the previous yearly low is pretty much right at the middle of that. So we set I think this low might be set on dollar for now anyway. I don't know if we're gonna take out these two lows. We made it this low at a pretty significant area. But there is a potential because if we look at the monthly, we can see that it's pretty much a doji right now and a doji to the downside. So we still could be aiming for this monthly, this weekly fair value gap right here. We could still be trying to get down there, right? But for now, because we made this low at this order block, I'm hesitant to say that we got a lot to push down lower because all of this liquidity on the weekly is still there. And then if we look at the daily, all of this liquidity along this area is still here. So I think before we try to run down into this, I think we grab some of this liquidity first. And I think we aim for this fair value gap to get tapped into on dollar before we make that run to the downside again, or if we do it at all. So before we make that run, I'm thinking that we push up at least to try to get some of this liquidity. And if we do push down um, for a short term, I think we hold up inside of this. Before we really do anything, I think we have a chance to hold up here. And then once we get in there, I think there's a decision to be made inside of here and see if we trade below it and do something like this. But for now, I think the aim is to take out some of this liquidity that we got going all the way down along this area. So we got a lot of money sitting right here. And I think they want some of it back. So before we do anything to the downside, I think that we need to deal with that first. You also have another reason to justify this move to the upside, because what do we have here? We have our order block to our bullish order block that got confirmed. We have inside of this order block, we have an inverted fair value gap. So, and we took liquidity. So this is a perfect order block setup right here with a fair value gap to the upside right here. So we got all of the things that line up with what we need to see to get an inverted fair value gap set up. I'm not going to go over it again, but you guys know the details already.
Mm-hmm.
The more you can spot it, the better you are on your setup. You got your order block that took liquidity from here and here. You have a failed fair value gap to the downside right here. And instead of it selling off right there, they used it to buy to the upside. This fair value got inverted on this candle. This is the order block. This the high. This got pierced right here. The fair value gap to the upside is right here. They tried to use it. They used it already once here to go ahead and take out the first high. That was the first highs we took out. Now the next high is here. I don't think we need to go back in here before we take out this high. So for now, this high is short-term target, $1. And I'll run that out until next week. This previous day high is our short-term target. That's also within the fair value gap, a smaller one. You can see it right here. That's why I think we'll run out that high. And then once we get here, we kind of have to monitor this to see how we react. So overall, though, I think we go into this one, though. I think this might just get used to get us up there, right? So we'll probably even take out this high before the end of the week. So that means that, let me send you guys this chart. That means that the opposite for gold means the opposite for gold. We already seen some selling off on gold. Haven't even marked this one up since the contract changed over. You can see we got this huge gap on the daily, another gap, and you can look at these just like fair value gaps too. And or the same way we look at our setup for the order block, because this would be the inverted area right here. That's the inverted area. And then you can look at this range as your fair value gap right here. that we pretty much already traded into. I just included the gaps over here. That's why I look kind of weird, because I just included the gaps, because we're gonna typically feel those anyway. And instead of using different ways to describe that, I just added that all in to it, right? So now it's a matter of, do we take this low out right here, which is the most recent point of interest. It's a previous day low. We've already taken one out right here, but we're inside of this fair value gap. So if we take this low out, we need to be looking to see, like, do we continue to come after this low, or is this going to be a rejection? Because if dollar keeps pushing up, this will probably take out this low, and then we'll need to see what happens inside of this area. And once we get right around this level, because that's now an order block. Let's just double check weekly. Yeah, weekly, you can see this gap or area right here. That's pretty much lining up with everything we just kind of went over. Just want to check the monthly. Monthly is very, very bullish. So again, that's kind of lining up. Let's go 4 hour. 4 hour, pretty much lining up the same way. Nothing need to be added on the 4 hour. As we go back into the 1 hour, I just want to look just to see if we got anything that's standing out. That same, order block that we had, you can see it more defined on the 1 hour, and you can see our inversion right here and right here, and you can see that we took liquidity right here. We also took liquidity below this low. So, worst case, we try to come down into this hourly area, but the hourly area lines up with here. So that's why I think that might be holding. Then you can even see on the top side, you can see that we got an inverted fair value gap that's potentially taking us lower. This is the one to the downside. And then you can see that we had a bearish fair value gap right here that kind of dropped us. This is the one that dropped us. So we got the setup on the downside and on the upside that pretty much dropped us. You see, if we had to use this setup, we would have been able to take this sell out of this range and get down to take out these lows here and then trade into this order block. So for now, if we're going to sell off again, it may be a situation where we come back in here. Let me look at the 4 hour. We do have a fair value gap right here. Maybe we hold inside here. So I would look for something inside of here, potentially, if we try to sell off again. There's a couple of lower time frame things too, but possibly tapping back into here. Yeah, I don't see any other significant point of interest. So I want to see how we react in this area. I'm gonna send you guys the the 1 hour and the daily on gold. Those are the charts that I'm liking for gold. 1 hour. And then the daily. Let's just see how we react up in this area. The daily telling us we 50-50. Okay. The next chart is again, I haven't looked at these, so let's go YM. YM. We pretty much flat for the week almost, man. We open up to the downside initially and then end up closing higher Monday. We close higher initially. We were pushing higher on initially on Tuesday, and then we dumped, and then we pretty much stayed inside of the candle of Tuesday's candle for most of the day until we sold off at the end of the day. So for now, you have to assume that these lows are at risk. And this is on the 4 hour and on the lower time frames. From where we are, you have to assume that we are likely to take this out. Um, this looks a little janky because you got some overlap, this huge fair value gap here, and then you got another one here. I'm going to see is there a better look on this. Um, pretty much the same on the 1 hour. It's got it here, it's got it over here. What about the daily? Daily, it just looks janky. Just a lot of up and down chop higher. There's some gaps. They seem a little irrelevant though. This gap has been used here, but yeah, I don't like how the daily looks. Let's go. What does the weekly look like? Weekly looks pretty much the same. So if I'm looking at this right now, the 1 hour and the 4 hour chart looks the best to me. And I know we already traded through this, but I like this being our point of interest to consider. It looked janky though, but all of it looked a little janky. But I like this fair value gap to be the one we consider. And I like it because we got these equal lows right above it. So we dive into this. Once we dive in, we see how it responds once we get there. So this is the 4 hour. So I think we do dive into this. I don't know how deep. And if we are not going to use, if we're going to use this to go lower, we should get a fair value gap through these lows. And then we see how we hold. And maybe we want to come back and take out these lows too to tap into the monthly. Maybe. That's our downside look.
And it may get reject from 50% also, right?
Uh-huh. Uh-huh.
Mm.
Yeah. Because we got liquidity here as well. And we do have this fair value gap, but I don't like the way this one looks. So that's why I'm gonna focus on this one for now.
Mhm.
This
So
is no
don't
reason
worry,
why I'm
this,
not using this.
yeah, this is inside the, all these things is happening inside this bigger one,
Yeah,
but yeah, but not directional.
there's no reason why I'm not using this, but to
Mhm.
me, I this just covering I just don't like the way it looked to draw
Mhm.
a fair value gap all the way from here to here. And we already had price action inside of here. And I think this will be the first one we try to react off of. So if we look at let's look at the 1 hour. We already got our fair value gap here. So what I'm gonna assume off of the 1 hour, this helps me kind of see that all right, if we do go up, we trade above this fair value gap and we invert it. And then we come back in, push off of it, and we either go, we take out this and we keep going, or we come into here and we try to respond to that. So for now, that's all. That's what I like for the rest of the week. Um, if we're gonna go to the upside, I like for us to come into this 1 hour. If we are to keep pushing up, I know there's one here, but given that it's at the weekly, and if there is a chance to push up, it'll need to invert this. So
Mm.
that's kind of why I like that setup. So this will be my setup on YM. And this on the 1 hour. I like the 1 hour and the 4 hour chart. So I'm gonna put that in both of those in there. You can see that same fair value gap right here on the 4 hour. We would need to invert that to get to this, get back up into this 1 hour. And then you can also see a little small 4 hour right here that would also line up with that too. So then there's also an inverted one right here. So again, inversion, replacement. If we're going to use it, we need to come up back above here. So it's still lining up with what the 1 hour chart's saying. So no change from that. So this is a 4 hour chart. YM 4 hour. Okay. Now we go to Dow. This is the 4 hour on Dow.
This is MNQ.
Oh, that's one. I'm sorry. On NQ. This is a 4 hour on NQ. Sorry about that. This is NQ. Similar. Inverted. Fair value gap. Liquidity taken here, here, and here. This low is pretty much right around this area. Nothing on the 4 hour chart that stands out. But we do,
That's in daily FVG.
yep, daily FVG. That's here. Let's go. Got our daily bullish fair value gap. What is the weekly looking like? Weekly looking like we should be. We got a weekly fair value gap right here too that we're creating this week. So we got a new fair value gap that we're creating on the weekly. We got another one right here that hasn't been traded into and doesn't look like it's going to be traded into. Monthly, super strong. So this is implying right now that we have next month, which is coming up pretty soon. If we close like this, and we were to hold up near this high, we have a shallow month, a shallow retracement on the monthly, and then we go into trying to see if we're gonna take out any highs. Today, we did take out 3 daily candles. We took out yesterday, took out the day before, and we took out Friday just to hold inside of Thursday's candle. So the question is again going to be, do we take out yesterday's low or do we take out yesterday's high? Or do we range in between? Though that's the 3 questions. As it stands with us being bullish, for us to take out yesterday's candle, we would need to trade through the middle of this fair value gap. And the candle that we would be aiming for is to take out this low. I don't see it right now, even though we are selling off for the week. I don't see that we would take out this candle or this candle. So I think that we got to look for lower time frame. Where are we potentially looking on the lower time frame? Or again, right now, this is the closest area of liquidity. And since we are being forced higher, you have to assume they're going to still force it up. So we do have this down candle that took liquidity. It's looking like 1 hour will give us a better play. Eh, not even 1 hour. I don't like 1 hour either. It's kind of low liquidity run. So I'll say weekly, see how we react here. There is a fair value gap that's right at the weekly. So, and you can kind of see there is one right here, but we doing a low liquidity run right now, and we pretty much trading. We've already traded through this for the most part. So we can look at that because right now it is getting in. It's still bearish right now, but you can already see that they're using this to go higher anyway. So if we were to draw this up, we already in the upper half of the bearish fair value gap already. So the probability is that it'll probably go ahead and trade through this and then try to use this to get back to the weekly to go higher. So and once we get to the weekly, that's probably where we'll see whether or not we'll keep going or whether we sell off from there. So, and if we do keep going, this is yesterday's high. That'll be the high that the main high I look that we take out yesterday's high. Uh, and then after that, we got equal highs here. So, and this is a new all-time high. So maybe we do something up here if we keep going. And this is the all-time high, and it's equal highs. We can see. All right. And as far as what I think we'll do, like I said, I don't think we're gonna take this out for real. We need to see a fair value gap, and I see us trading a bit lower, but I don't necessarily see us pushing down below this candle um here or here. So there is this order block right here. That's kind of why I put the target to hold up inside of there. So that's kind of why I did that. Upside is we already see we pushing up below this. If we fail, I do see that's a potential that we could reject here and then take out this low. So that's another sell option, right? And then the buy is if we get up here and we try to sell off, but we can't. We hold inside of this range, and then we push up into these highs from here. And we do something like we take this out and then we hold in here and then we possibly go for this high. So it's actually 3 scenarios on here. So I do see that we can still buy up and sell off here, or we just go ahead and sell off somehow, or we push up, try to sell off at the weekly, hold inside of this fair value gap that we are already in right now, and use that for a catalyst to get us above these highs. So it's going to be 3 setups on this one. Potentially 3 setups. And then let me just draw this little order block. That is why I don't see us going too much lower than that, because of this. This is the 1 hour. And I'll add the daily as well. Don't worry about all the little marks. And last but not least, we will move to ES. So this our chart. Last but not least is ES. Looking pretty much like NQ, where we got this little long janky candle here. We got an inversion up here. We got fair value gap to replace it. We had liquidity swept here. Liquidity swept all the way here. And then we left liquidity down here on the 4-hour chart, and probably can see it on the 1-hour chart. This is still available. We do have this huge fair value gap on the 4-hour. I like this one already because we got inversion. We got our setup right here. So I definitely think we come back into that. Just don't know how we're going to respond to it. On the daily.
I'm gonna let you finish.
Go ahead, Tree.
So that's where I try to buy it, and I realized, like, oh crap, this is about to sell off.
Right here.
Right there. That where you the last one you just, but I was right in where those dojis was happening. I was there buying it.
Mm-hmm.
You see that blue candle with the wick at the bottom? It's like, yeah, that one. That's where I bought. And then I was like, look like it's not holding. I stepped away and this is where I made a mistake. I set it up my trade up, and I didn't put my stop loss. I had my stop loss marked up, but I didn't put it in the system.
Mm-hmm. Mm-hmm.
And that's where I messed up. I was like, golly. But I just thought it was going to buy there because it gave me that. I felt like it gave me that signal that it was going to buy.
Yeah, yeah. I didn't trade it live, so I can't say. All I can say is we had a big old fair value gap sitting right above it.
Right.
That's all I can say. So I don't know how I would have reacted, but I do know that we inverted here. We replaced it with this big fair value gap to the downside. And usually when that happens, we ain't coming above that.
And I think that's where I messed up, is that I didn't look to the left of that.
Yeah.
I think that's exactly where I messed up at.
Yep. That makes sense. That makes sense. Um, and then, I love seeing this kind of little quirky stuff. And this how you know I'm a nerd about this, right? You see inside of this inverted fair value gap from the 4 hour.
Yeah.
We should have, if we were bullish, we should have bought inside of here, right? And you can see that on the 4 hour, right? We should have came down in here, held either like, let me extend this out. In a bullish environment, right? We would have did something like this. This is where the fair value gaps candle range started, right? We would have pushed all the way up here like we did, and we would have made this high right here, these highs over here.
Mm-hmm.
And if we bullish, we either would have bought from the high of the fair value gap and then kept going, or we would have bought from the middle of the fair value gap and then kept going, or we would have bought from the low, which it kind of tried to do right here, and then we would have kept going, but we didn't. We actually, instead, from this high, we actually traded all the way through it, and then we came back up into it and sold off again.
Mm.
That's the kind of thing you want to see when you know that it's not bullish anymore. Once you see we trade below this, right?
That's what I miss.
This bullish fair value gap got replaced by a bearish fair value gap.
Yeah, I literally that's what I just wrote down.
Yeah,
It changed direction when
it
it
changed
got
direction. Yep, it
that
changed
was a good.
direction. And when you want to see, like, is it gonna change from bullish to bearish? You want to see something like this, where you see I have a bullish fair value gap, and I should be buying from this area, right? So if I do a replay, right, I right now, let me get this off the chart for now. Up until this point, right, I see this big old gap, right? I'm thinking that this gap should look like this one, right? If I'm looking at this gap up here, do you see how this gap look right here? We have fair value gap that's bullish. We have high taken out. Then we have price come back into it, and then it buy from there. On the 4 hour, we have fair value gap. This high get taken out. We make another high. We should be either making another high or we coming back into this fair value gap that now is still bullish right here. We don't even know that this is about to get ran through, right? All we thinking is it should buy, and it should either buy from the high, middle, or the low, right?
Yeah.
That's how we should be thinking. So at this point, from this high we just made right here, we should be looking for this. Or we should be looking for this. Or we should be looking for this. Right here. Oops. One of these three, right? And as long as we see something like this, then we should be thinking buy, right? But if we see something like this, where it is, ooh, we took all the way through it, right?
Yeah.
Now we gotta be like, oh damn, like this ain't what I thought, right? And we either gonna come back up here and then we gonna bounce and keep going, or we gonna come, or we're going to from this high after we take this out, we coming back in here and then we using this to go back down. So that's how you got to look at that, right? And in this case, we did this move. We used it and came back down, right? And so,
Yeah, I did it right to the fair value gap to the left. The one that one was correct, but when it blew past it,
yep,
I
yep.
I jacked myself up. I didn't.
Once you see that you get close below a fair value gap or a close above a fair value gap, you can pretty much call that one a wrap. And it might not be using that for now. It can wick all day. Like we can come down and wick this low and then trade back up. That's okay. But we can even come down and wick all this. But if we get back inside of this body without closing below here, then we still bullish. But if we get outside of this and we close below this, it's probably going to be bearish because at that point, it has created a new fair value gap to the downside in most cases that has replaced this.
Got
And
it.
it's no longer bullish anymore. And that's essentially what ended up happening. If we if we go back, we're gonna go back, and the bullish fair value gap got replaced by a bearish fair value gap, and that bearish fair value gap was from here to here,
Yeah.
and this bullish fair value gap that we had, we might as well get rid of him and just note that okay, we got inverted. Got all this inverted. And now we dealing with him. We tried to trade back up. We didn't even make the 50% point. That's where you were trying to buy. And that's where they sold off from. So now
Lesson learned.
it's all right. It's all right. It's all right. Now we got to look at this, right? And see, if we still bullish, right? We already got the same kind of scenario happening, right? We have this fair value gap on the 1 hour. This is bearish. We're in low liquidity, right? That means in low liquidity, usually these initial fair value gaps, they probably gonna get traded through, right? We probably gonna trade through this, right?
When you said low liquidity, what does it mean exactly?
Not a lot of volume,
Okay.
not
Yeah.
after hours. So it's
Mm.
still it's going up, but it's low liquidity. It's not a lot of people trading right now,
Okay.
even though
Low,
it's going
low
up,
volume.
low volume, right?
Oh. Mm.
Low liquidity, low volume, not a lot of people involved in the market right now. So because of that, you can see that this fair value gap can get traded through without needing any of the normal stuff to happen, right? So this fair value gap right here that should, under normal circumstances, be selling off, it might get traded through without no problem because there's nobody in the market to sell it off right now. So that's why this one is more pop is going to be the one that we pay attention to. And just like we had on NQ, I like using the close from yesterday. So just like we had on NQ, we could see us trade on through that, right? Get to the weekly and to the low of this fair value gap, and then see how we react. The question will be if we sell off, we go ahead and take out this low, right? That's the first thing. That's the first setup. And then, even below this, we got a fair value, we got an order block down here. So that's, even though we got a fair value gap, there's a possibility that we tap this because of just how the structure is. And because of how structure is right now, I say we tap it because we probably would take this liquidity and run through this fair value gap, but hold it and then hold here and then trade back above, right? The other scenario is, hey, we don't do none of this stuff. We hold this and maybe, push up, and then we hold inside of the fair value gap, and then we push up higher and we come after this high and get to the middle of this fair value gap. That's one buy scenario where we use this one that we in now to buy us up higher and go higher. So, and then the third scenario, which I'm seeing is, again, we go ahead and push through this. We get above the weekly and we go ahead and just smooth, clean, straight trade through this high. And we get inside of this and we hold back above the weekly to get to the high of this fair value gap and see how we respond. I'm gonna draw this a little differently because it's probably hard to see. And then just depending on, I know it looked kind of funky, but I don't know any other way to kind of get it, all of these potential setups. So we use this fair value gap, this gets inverted, and now we start buying from it. Once we buy from it, we get traded back into this fair value gap. And then once we get inside of this fair value gap, we got equal highs right here from yesterday or from today. And then we deal with this. And if we take the highs out, that could be liquidity for us to trade to the middle and then sell off, or trade to the middle, then hold inside of this range and maybe push higher. There's one more scenario that I do see, but I'm not gonna really mention it yet. But the other scenario is, so we, from where we are now, we trade up, take the liquidity from these highs in the midpoint, and then try to sell off from there. But I'll leave it on the chart because that's definitely a scenario too, where we go ahead and push up, trade through the weekly, take out this high and trade through the middle, and then we sell off. So, or we go ahead and get to the weekly and we sell off, or we buy and we hold this range that we in now, buy up, take out this high because this is going to be primary target initially, or we go ahead and just trade up through it and then hold inside this range. So those are all the setups that I'm seeing. I didn't like the daily setups on this. If we hide this real quick, we already pretty much responded to this gap. We still kind of in there, which is why I think that we can still push up higher, because maybe we want to use this gap still. We already tapped the body into it, and you can see that we held on the close and we gapped up. That's why I still see the potential for us to come back to the weekly. And then right above here is that 4 hour fair value gap, pretty much right around 67.28 area. So you can see that right here, 67.28 area, and then 67.30 area is the middle. So that's why I still think we can use that. But no need for the daily chart. I like the 1 hour chart the best. I think this one has all the information we need on it. So I'm just gonna send that, and let me just add like this yesterday's high, equal highs is one target. And that's equal highs. That's my target on the upside. These are my targets on the downside. And this is pretty much the weekly low, but I got it listed as daily low for now from yesterday. And try to get all of this in this shot. Okay. And this is ES 1 hour. Okay, this is my time. And y'all got any more questions? Anything else?
I have a question on Zoom link, how to transcribe that, but you can stop this recording, then you can tell me.
Essentially, you got to have a paid account. It'll
Yeah, I
if
have.
you got the paid account, you
Yeah.
go up under your settings in your Zoom, and when you set up the meeting, you have to set it for to transcribe. Um Under Zoom. Let me just go through here. Hang on.
So every time you need to save your transcript?
It automatically does it.
Okay. Because, okay.
Under my account, I
Mm-hmm.
have mine set to automatically transcribe immediately once I start recording. So, for me, it all
Mm-hmm.
automatically does it. So I already have these meetings scheduled out on the calendar. So every meeting that I start automatically has the settings that I have set up. So when I schedule the meetings out, they automatically come with my summary and my recording. So if I go to my meetings, um, uh, I schedule them here, you can see that this is the one from this is like I have a meeting that I have on my calendar for all of my every day that I trade New York session. And even if I don't trade it, I already have it scheduled out. But and then like this one, my daily trading review and then midweek review. If I go in, I can't do it now, but let me see. Let me look at the one from Sunday. If I go into the one Sunday, um, edit edit series. I already have settings in place where, I got all of the scheduled date, all the info, AI companion, automatically start summary. So you get all of that. All of this is set up ahead of time, enable continuous meeting chat. So, that's how that's all set up. So
Can
now,
you go to your meeting and recording and transcript?
huh?
Can you go to your recording and transcript? Yes. Yes. So go to transcript. So it's here, right? Every time you need to download and then you can copy and paste, right?
Is here and is underneath this. So if I click on this, I'll see all the files associated with that. These are all the files. This is the video. You can get the audio, you get the transcript, and anything that we chat added in the chat is here. And you can just download them all. And what I usually do is once I download it, I
Mm.
will add it to YouTube, and then once I put it on YouTube, I'll just delete it off my computer. I'll delete it off of out of my Zoom so I can keep my space.
Okay, okay.
I just haven't done it in a while, so I needed to get rid of some of these already, so that
So
I
in this transcript, it comes like a one sentence, like a my name and then my
yeah,
sentence, my name, my
yep,
sentence.
yep.
You do you change that or do you exactly copy and paste?
I just put it in Chat GPT and let it clean it up, and then I use it from there.
Okay, okay,
Yeah, I don't. Yeah, I just take the transcript and I have Chat GPT clean it up for me.
okay, okay. Yeah, got it, got it.
Yep,
I do till here, but I don't do like in chat GPT and then copy paste.
yep.
So that's why I was because yours is very organized. Mine is like my name and then those things. So I don't want to see every time my name there, right?
Yeah, and that's how mine is too. But I
Yeah.
just throw it in Chat GPT so I can so it'll be clean. So like it'll come back in like let me see. This is one of the transcripts. Let me find one. Um mm, 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 mm. Yeah, I think this might be one. I don't know.
No, this is clean.
That's clean. I think I deleted them off my computer.
It's okay. Now I got it.
Okay,
Mhm.
okay. Yeah, I've been deleting them, so I don't know. I don't have any. Yep. Okay. But
Thank
that's
you.
no problem. And I'll get the recording of this
Hmm.
as soon as possible, and I'll add it and send y'all the link.
Okay. Thank you.